This is Justin Pulitzer. This is Sunday, July 5th, 2015. I hope everyone enjoyed the July 4th holiday weekend. Turned out to be a safe one. No incidents of terror, which is good. However, Greece sort of went the wrong way. The Greeks voted no on their austerity bill, which was the referendum that we've all been hearing about. And the implication is that they may be imminently leaving the Eurozone. So this immediately puts Greece into some trouble because they're going to have some problems paying their public services, their pensions, which were the big part of this, I guess, debate. The Greeks retire, I believe, at 55, and I think the German taxpayers were kind of getting a little bit sick of that. And I know the response out of Berlin was pretty scathing to the fact that they were even doing the referendum, and the results, I'm sure, are even further inflammatory. This has been obviously hurting the ability for credit there with business, and Greece relies a lot on travel and tourism, which is suffering tremendously as a result of this. I know a lot of people are talking about Greece going to China or Russia for a bailout loan, which is possible, although I don't suspect that Vladimir Putin would fare as favorably with the chance of default here as some of the softer European counterparts. Can't even imagine how that would be ending if they tried this nonsense with him, frankly. Anyhow, The problem here now is going to be what the Troika is going to do. That's the European Commission, the IMF, and the EU, the European Central Bank. So they're going to have to. I personally think that they're going to have to come down pretty hard on Greece. There is I believe a Tuesday meeting now, yet another summit about Greece, and I think the discussion now is going to turn. We'll have to see. I mean, maybe they'll blink. Maybe they'll, meet some of the demands of Cyprus. I don't necessarily know that that's going to be the case. I think that they have to show that they are a viable unit, and that if people don't follow the rules of the European Union, that there's going to have to be a penalty to pay. As we all know, the cash machines are shut off in Greece. I think they're limited to 60 euros a day, and I would imagine that if there's further, I wouldn't say sanctions, but if I would say that there's a further tightening by the Troika, that emergency loan might be cut even further. So it seems as though Greece is sort of on the road to a Grexit, which is what we all talk about, the exit from Greece from the Eurozone and a return to the drachma. This I don't know long term. I'm not sure the implications of this. I know that would make it easier for people to go to Greece and invest in Greece and travel with, their tourism would jump. But the question would be how many people would be so apt to loan Greece money now that they've seen them default and were booted out of the Eurozone. That's yet to be determined. I know the Greeks seem to think that this is a negotiating point, that this now has strengthened their hand. I don't necessarily know that's the case, and I don't think the futures seem to think that's the case, considering they're down about $30 or so, and that's even off the lows. So with that said, that's our backdrop for the week. So let's talk levels and what's reality here. So the expected move in the S-Spiders, which is the SPY, which is the ETF for the S&P 500, is about $4.50. There's a lot of open interest in terms of the puts. I was just did a quick. There are some break levels in between, but the two major OIs that I see are the big round numbers in 5-point increments, which is 205 and then 200. There is some other OI in like the 204s. I don't want to get too into that though, but that's about the expected move. So let's move into these charts here, and you can see I have this longer term channel that we've drawn in. I have a bigger, longer-term Fibonacci retracement from this sort of low here that hit the channel all the way to up here, and then a smaller fib from here up to here. And you can see I'm going to move into our current time horizon. If we were set to gap down here, if this gap holds into Monday, we would be taking out these lows. We would be taking out the 200-day moving average, and we'd be coming in roughly around these lows here, which could be some support. and also the 61.8 Fibonacci retracement of this last move, which isn't that unhealthy. It is sort of, I mean, considering the range of chop we're in, it would just be taking us to the lower end of the range where we were a few weeks ago. So that to me would be the first immediate point. That's around the 203.94. Remember, I had said there's some interesting OI around 205 and also 204. And this is also sort of the edge of this distribution here, this large distribution. So it would not shock me to see if there's some responsive buying here. For a while, I've been talking also about a move potentially to fill this gap here, which is sort of the initiative move that got us going. And that would take us to this was sort of the old breakout of 201.90. I would say that would be a little bit more bearish considering you'd be taking out these lows, but it wouldn't be all that unheard of. There's also sort of a higher volume node here on this other mini distribution. And the big risk that I see, I don't know that it's going to happen this week, but it is possible that if there is a real falling out of bed that we do get down close to that 200 here, which is the channel low, and it's currently in the 199s, although I don't expect us to traverse this entire range, but by the end of the week, maybe we are at the channel low. Would also be close to a 100% retracement of this move, which was down in 97s. That to me is the time horizon we're looking at here. If the correction were to get more severe, there could be a bit of an overshoot down, like I said, I had originally said just a minute ago, to the 97s, but the big 61.8 Fibonacci retracement of this big move here from the last time we tested the channel low here could take you down to 194s eventually if this level breaks. I do expect rallies and bounces before anything like that happens. I don't really see this just completely falling apart. I would also be very careful chasing shorts on apps on breakdowns. I'd be looking to be selling, to be shorting rallies rather than on breakdowns, because there will be headline risk to the upside if there is some type of a deal made with Greece, if there is some ECB intervention, which I am expecting, potentially even by the morning. And, of course, there's always the Fed. I am expecting those swap lines eventually to be reopened with Europe so that the currencies have a little bit more stability. But these are the levels that I'm looking. I'm personally looking for this area, this 61.8 down to this like sort of 101.90 to I'm sorry, the 201.90 to 202. This area here to be some price memory, and I think that might hold us for a little bit, and I'd be looking for a little bit of a buy the dip in that area for right or right out type of plays. The channel low, obviously, if we got down to that 200 near these lows, somewhere between 200 and 190, like let's say 198, within those $2, that to me would be a good spot to try for right or right out in size against the channel low. If there is some type of a pattern failure and we do move back up higher, you need to now take this swing high out here, this 208.27, for still higher prices up. I've been kind of sounding the a cautionary bell. You can see I even have it on here, caution if below 207.84. So anything below 208.97 and 207.84 to me is a little bit more precarious. You can see there are hammer lows here. Around here, there was a look below and fail here. So this area has had a lot of price memory, and you can see we broke through it, held the 200, bounced back up to it, and now we are failing back below it. So the pattern here, I'm sorry to say, I know a lot of people are, have been by the dip for a while, but we have a high here, a lower high, and now lower lows here. So the pattern here is starting to shift to lower highs and lower lows. A few people have been discussing this on the stream about the potential of a head and shoulders, this being the left shoulder, this being the head, and this being the right shoulder. Usually when I look for a head and shoulders pattern, I look for more elongation. Like I would be looking for like a head to have come up higher, like this to be the left shoulder, the head to have come up to like here, let's say for instance, back down, and then for the right shoulder to be equal to or lower than the left shoulder. But this right shoulder, you can see, almost came up to the head. So I'm just saying it's a lower high. I'm not really calling it a head and shoulders pattern. This here, if this would have sort of rolled over, maybe, but there was some price action up here, so I'm not really calling it a head and shoulders pattern. I know everyone, that's sort of like the technicals for dummies, so to speak. Not that, everyone just sort of is always looking for the head and shoulders pattern, but all head and shoulders patterns aren't created equally, and this one to me is a bit of more of a weak one with less chance of a follow through, because the right shoulder here is higher than the left. It's almost at the head, and the head isn't elongated higher. That's the kind of head and shoulders pattern breakdowns I prefer to see. This, to me, like I said, I just think is lower highs and lower lows, and in the context of the channel. So that I sort of ad infinitum, I went over this. It's sort of important because S&P is the most important. IWM here was a sort of a look above range, and just kind of came back into range. We'll have to see how low this gets. It's still above the old high, which was the 201.90. I believe that sort of the key buffer zone is between the 201.90 and the 199.39. Let's say she comes down kind of hard into that this week, this is the key area. If it can hold there, I would say IWM is still in sort of quote-unquote okay shape. Anything below there gets a little iffy. But as we know, that 117.37 that I had discussed quite a while ago, that area sort of is like the last line of defense. It's also a volume distribution. That would be a pretty nasty move down and a lot of pain, and then starting to make lower highs and lower lows. But this, to me, if we come down hard into this area, I'm going to be looking for a right or right out type of trade in IWM, 119.39 to 202.97 for a kind of bounce. If that doesn't hold, I'll flip short and probably do something like a put spread or a put ratio. I'll have to discuss those levels online. I want to see how she opens and trades on like Monday and Tuesday. Q's a little bit weak also, sort of a little bit triple top-ish, although these are sort of now become poor highs. I discussed that I was a little bit leery with NASDAQ making new all-time highs with Apple, not confirming. I'll discuss Apple in a sec, actually, right after this chart. So the key levels here, we are likely going to open up below. The 106.25 is a key level. 105.26, 104.59, and then the 61.8 is 103.87. This area to me is there, the 200-day. You can see the NASDAQ has been well over the 200-day. I do believe this area here will be these lows, the 200-day and the 61.8, will be a very attractive level for some type of right or right out long action. Somewhere around that like 203 area. You can see there's a gap fill around 102.80, so maybe there's a slight overshoot, but I do believe this area here would be a great right or right out area for just some type of a bounce. We're not talking about investments here, since like I said, we are making the pattern is shifting a bit. Have to be a little bit careful with that. When patterns start to shift, things start to get a little bit more squirrely. Apple here is sort of holding one channel. There is the real primary dominant channel down here around these past reference lows around the 123. The breakout also is the 119.75, so somewhere between there and the 123s. I think this area on weakness. You could also see the 200-day is creeping up here in the 118s. I believe somewhere down in the low 120s is a good area for right or right out, sort of the lower end of the distribution. So that's what I'll be looking for this week. If Apple does have some type of weakness off of Europe and the Grexit and all this nonsense, I would be looking for that area as a buy the dip. Google was starting to look a little bit better, although I'm still not such a huge fan. It kind of just bounced to the 200-day moving average. It's been in this like chop range for a while, with the 580s being the higher end of range, and then down here the lower 520s being the lower end of range. That'll probably persist for a little while. I would be interested in buying Google on some type of weakness down near this gap fill here around the 513.23, somewhere between there and like 490. So between 490 and 513, if there's some weakness this week, I'd be an interested buyer just for a sort of a bounce. But as you can see, this has built up a lot of consolidation. There's a lot of now overhead inventory. My bounce play would just sort of be like back up to like where the supply is here, about 538. It's been showing a lot of relative weakness, and I think a lot of that is because it's been losing market share to Facebook, and they're also having some EU trouble. Like the European Union is giving them the business. I think they're kind of looking to break them up. I don't know if that's going to be so successful, but we'll have to see. Facebook, if we do get some weakness on this Greek BS, I would be looking to be a buyer somewhere into these Fibonacci levels, particularly anywhere around this. Somewhere between 81.60 and 83. I don't know if we necessarily get back there, although the 50-day we all know has been really important. And this has also been holding up fairly well in the face of broader market weakness. Anything over 85.51 to me is still bullish. If it gets below there, I'm willing to give it a little leeway to the sort of the 84s and the 83s. I would be looking, if we do come back down here, to either be buying stock for right or right out long, or to be selling out of the money puts, preferably 82 strikes or lower. I usually like lower, like somewhere between 80 and 82, I think, like 81s, 80s. If IV really jacks up in the high 70s would be great, but I don't necessarily know we're seeing that again. I would think that these mid 80s sort of hold it, and that would be my play on Facebook. Let's jump into Twitter since we did Facebook. I had discussed this being sort of a secure low, this 33.51, since it was bookended by two higher lows, and we've just been now kind of chopping. We had a bit of a higher low here a smidge of a higher high. I think this is just going to be a lot of chop into their earnings. I'm not a huge fan of the Twitter chart. This is really a binary event here. I do believe at some point she is going to see 45s. I don't know that she doesn't see 29s before 45s. That would be filling up the triangle here to the old lows. I don't really want to have to. I guess I will. Let me bring the chart back 2 years daily. As you can see, that would take her down to here, roughly the 29s. That's sort of the big fear, I think, on people on the street if they miss again, or if their user metrics or their MAUs aren't good. That will come down to 29s. It's very possible. It would not shock me. In light of even what happened to Yelp the other day, you can see Yelp kind of got yoked. The stock here came down. They had been discussing here about potentials for a buyout, but it's very hard to play stocks like this on this type of play when fundamentals are deteriorating. I happen to believe that they have a real business. I think that their service is okay. It's just a bit overpriced, and they're having some problems. You can see here took out these lows. So this is sort of the risk, I think, that people are going to be thinking a little bit with Twitter. I think it's a bit of a different scenario and a different story because the Twitter property is probably a little bit better than Yelp, but that is the risk. Let's get back into index land here with the VIX. We are starting. This here was a higher low. We are now making higher highs. It held the 200-day moving average, which you can see here. What was resistance, nothing sustainable over here, is now starting to become support. This could be a transition in volatility. We will have to see. Anything above the 1785-ish area to me starts signaling a little bit more bearish. If you can eclipse this 1980, that's basically 20. You're looking at 22s, 23s, and potentially 25s. I will caution you this. The way I kind of look at volatility, 20 to 22 is cautionary. Anything between 22 to 25 is exceptionally cautionary. And over 25, it starts putting crash risk on the table. I don't know that we're going to see that. I don't really know what would cause that in the macro sense. It's certainly not going to be Greece. Greece is only like 2 to 3% of Eurozone GDP, and I think it affects us like 0.0. I think I read somewhere it was like 0.0004% or something. So I don't really know that Greece is going to be what takes us down. Obviously, the fear of the contagion is one thing. So if you're sort of a macro wonk, you might want to follow the CDS or the credit spreads in Spain and Italy, for example. They've been upticking as Greece has been going on, but they are nowhere near the type of fiasco levels that they became in like 2011 and 2012 in particular. So we'll keep an eye on that, although I'm not really thinking that we're going to see that type of volatility expansion just yet, but we have to keep that on the always have to keep that on the map. TLT is starting to kind of base here. I would expect that this will likely be a gap up considering the futures are going to be weak. I do think that there is potential to the 50-day up here and the 61.8. I've been saying around 120.40, maybe even to some of the challenge some of these downtrend lines. We'll see how that goes. I do believe that up here in these, like sort of where this breakdown took place here, the 120, let's just call it 123. It was 122.97. Up in here, I think, is going to be, you can see it wound up being some resistance here. I would suspect it will be some resistance again, although that would start challenging the pattern. Obviously, there's some rows to hoe here. You need to clear the 119s, obviously, before we could even have that discussion. And I do have some TLT call spreads on. I would be looking to book some of them up here around the 61.8 and the 50-day moving average confluence if we do see that. Let's see, what else should we cover? Let's cover IBB. That's a key indicator for biotech. We did make a bit of a higher high here, although albeit slightly, and it was a 2.618 Fibonacci extension. The 50-day moving average here has been a very key level. You can see we did break it a little bit here. We traded for a few days under it, but wound up coming back over. Now retesting it. That will be key. The 100 MA was what held it here, so somewhere between this 50 and 100-day moving average, which oddly would be a check back to the prior down channel. This area to me would be an interesting right or right out. I might, if this doesn't gap too terribly, might try some type of a put ratio to play for a near-dated move back down here, and potentially with a lower strike. So we'll have to see how that plays out. I will be looking to buy some Gilead if this fiasco continues. You can see we did get the channel top here that I had drawn in. And I had also discussed this being a 1.618 Fibonacci extension up here in the 122s. We are pulling back. I believe that the downside risk here is somewhere between these 106s and these like 109s if there is some major market weakness. That was sort of like the breakout area you can see between here. It's also a 61.8 Fibonacci retracement and like the breakout here. So it wouldn't shock me to see if there's some type of a pullback. I don't know that we're going to get that deep. It would also be close to a channel low. I would be an absolute right or right out buyer here, either in shares or out of the money put selling. But, there'll be some levels in between there. The 50-day moving averages will be potentially coming up here. I am looking to be buy the dip on Gilead. I think that their drug metrics were really good, and it's really not that expensive on a PE basis. I'm going to kind of do a quickie on, since I spent a lot of time on macro on the airlines. I had been discussing that there had been a lot of weakness in the charts. I don't want to go over them here, but Delta, American Airlines, Southwest, these stocks have not been trading well for a while, and I've been discussing the only one that the chart wasn't broken on was JetBlue. And there was news here this day that the major airlines were under, the four majors were under investigation for price collusion, price fixing. Whether or not you believe in the merits of that, I think it's a little bit stretched, considering you just go on Priceline or on Expedia and you could see the price of your competitors, even on their websites, and they're all roughly going to be, competitive. But JetBlue was not named in that complaint. So the chart here to me still looks okay. It did close above the 50-day here on Friday. It's roughly been holding this 100-day. We'll see what happens next week. There is some weakness in the overall market, but this could be setting up for, the inverse head and shoulders, this being the left shoulder, this being the head, and this being the right shoulder, and then presumably that would take you to the highs and higher. Considering the chart's not broken and the other stocks have the sort of the government overhang over them, maybe JetBlue becomes the go-to name. There'll be some headline risk, obviously, but I do believe that JetBlue is the sort of the best of the charts. Ambarella, we all know what happened with this. Parabolic moves don't end well. This came back down to 61.8. It's been bouncing a little bit. I would be interested in this on some type of primary trend touch here, or I should say secondary trend touch. I don't know if we're going to get all the way down to the primary, but if this were to roll over here and get to this yellow line here, I would be interested somewhere in the mid-80s. I think that that was also sort of where this kind of leg began, the parabolic part of it. it is possible that this does fall back down to earth and does get back to primary trend, but I do think that there will be a trade there. Not necessarily an investment, but a trade there. All key wording. Amazon, I've been saying for a while, I think is going to see its 1.618 Fibonacci extension up here at 484.73. It's been just really chopping here. It broke the channel, the up channel here, more by by time than by price, which is, it's bullish, I guess. It's more bullish than bearish. It's been holding up really well, even given the market correction. 50-day moving average is key. I do think that if there is some type of market weakness, we may be seeing the range low here again, considering we have been up sort of toward the range high. You really need to see Amazon clear and hold 439, which was this high here. Above 439 is bullish. Below it is a little bit more iffy. Let's just leave it at that. So some of the Chinese stocks have been taking it on the chin. We all know China is sort of like in quote-unquote crash mode, according to the media. China is down about 20% or so in the last couple of weeks. There's a lot of discussion as to why that is happening. My answer is it was up over 120% above before that. Had a bit of a parabolic move and is now pulling back. The Chinese now are cutting interest rates, and they are also allowing pension funds to invest in the market, as well as now we have news as of yesterday, a Saturday, that there is going to be some type of a fund. I guess it's sort of like their version of plunge protection to buy these stocks. So I would say BABA here, it's coming into this gap fill here of 80 bucks. We roughly got into that range the other day. There was a slight bounce. Lower highs, lower lows, kind of iffy. I had been looking for this sucker to get back up closer to like 98, 100. I guess 95 was all it had in the tank. There should be some type of a bounce. But, this stock is real iffy. I think it's sort of going to take earnings to do okay. They did all right the last time. It's come down a lot. I think that it's just a really tough chart. They're easier to play. I'm sort of shying away from BABA. I have a little bit of a long in here just for a tester, but, I'm not a big fan of it. I'll probably bail on that if it starts, not coming to fruition, so to speak, soon. But we'll see. BIDU, same BS. Came back up. I had discussed this being a short. I was actually looking for it to come up a little bit higher. I'm a little bummed it didn't to kind of fill the gap, but it is since rolled over. I'm not sure that I would be pressing the lows here. I do think that there is potentially a move back down to retest these lows, though. I just think that these stocks are real choppy, and I'm not a huge fan of. I've never really been a huge fan of Chinese internet, but they are just they're not hitting exact levels that I usually like to see. But that's my thinking on it. I think put ratios would be good for BIDU. Anyway, BP on the other hand, they have some clarity on their Macondo disaster. And you can see that this was like a false breakdown here, multiple days down. This is always why I talk about how you get to certain levels. Look at this. You had 1, 2, 3, 4 days straight down. You get the news, big gap up, encompasses 3 days, fills the gap, and closes over the 20, 200, and 100-day moving average 50s right above it. Moody's has now come out and they have upgraded the outlook for BP from negative to positive. So I would say that BP is probably with their big dividend, with their BP with their BAD, with their big insert expletive dividend, probably becomes a buy the dip type of a stock, and off of a higher low, and equal to higher low here. So you probably could use Friday's range as your reference. Anything below 40.72 gets a little bit iffy, but I do believe that this area in the high 30s high to mid 30s is definitely I would say a buy, and you probably can play this for still higher prices. That is my thinking on BP. Let me see if I want to jump around a little bit. The security stocks, FireEye. This one I've been looking to re-enter a long on. I wasn't quick enough here on the trigger here. I had been saying 46s, which was roughly the breakout in the 50-day moving average. We did get the bounce. We are kind of backing off a little bit. I do think that this here, somewhere in the mid-40s, maybe channel low if we're real lucky, in the 44s, I would be looking to buy the dip. I think that these stocks have years of growth ahead of them, and it would be a good right or right out level based against a bigger, longer-term 61.8 Fibonacci retracement you can see here, and also a channel low, also some references. So I believe that FireEye would be a buy there. Palo Alto, I believe, is a 50-day moving average beast. You can see it's held it here multiple times with some very slight violations. So this to me will be a right or right out play around 165 here if we get that on Monday or Tuesday. If it fails, you could just flip short, do some put spreads or put ratios for a move lower. But I do believe that that would be good for at least an intraday trade bounce. Let's see, Netflix. That is holding up pretty strong, I guess, in the face of the split. You do have earnings coming up. I would be a little bit cautious. It's probably still a buy the dips, though, in front of the split. Anywhere down near the 50-day is probably a good spot, as good spot of any, if you get some weakness, particularly in the broader market and the to be buying Netflix. You can see there's a bit of a channel here. The 50-day will roughly be there. So if there is some type of a move down and into this range, probably can be buy the dip. Price line, really choppy. I had discussed the 61.8 being a buy. I didn't take the trade for a couple of reasons. One, just because I wasn't really thrilled with the overall tape this day. And when tapes are going down, so to speak, it's tougher to buy technical longs even into that. However, that was a mistake. I was correct in terms of the level. I just didn't take the trade. It did have the bounce. It is kind of pulling back a little bit here, though, so I would be a little bit cautious on the tape if it rolls over and sees these levels again. If those fail, you probably got some trouble, maybe considerably lower. I'll discuss that in the next video if that does come to fruition. If you can take this level here, though, this sort of 1174, you probably will see the 50-day and the 100-day moving average, so that would be a nice $20 or so, still higher in price line. TASR, longer-term theme, years of growth, in my opinion, ahead of them due to the police and law enforcement needing body cameras. You can see it's coming down ever so gently after making some kind of new highs, roughly around the 50-day moving average. If you could get this anywhere in the mid to high 29s, or like let's say between the 61.8 down here is about 26.94. So between this area, this to me would be an absolute gift. I would say even a little bit higher, between the high 20s. I would say 29 and below, I would say, is a good buy the dip type of area for TASR, for sure, and out of the money put sale of opportunity. Tesla, I've been discussing this being bullish. I do believe we still see the all-time highs up here around the 290s. I believe it was 291.42. Pretty nice gap here, and price extension, although we are forming a little bit of a this is getting a little bit steep in terms of how we're getting here. So I would say, considering the steepness of this, you're going to be looking to sell into these past highs. I will be expecting some type of a pullback. Longer term, bigger picture, there are some Fibonacci extensions here, 321.35 and 359.41. I believe those will get tagged out. It will require some, I shouldn't even say it will require tape cooperation. I mean, look at Tesla. I mean, this thing is almost making highs on a declining tape. Part of that is because I think oil is going to go higher longer term. They also have the tailwinds at their back in terms of their product cycles. They have the Model X coming out. They had the Powerwall. They have some other stuff, I believe. So it's also the story of Tesla has always been one of high short interest, poorly distributed stock, meaning it's not like held by a lot of funds, and high consolidated insider ownership. That's always the recipe for short squeezes. So I do think that Tesla is a buy the dips. I would be looking to sell into some rallies, though, for some responsive sellers up at the old all-time highs between here and maybe 300. Maybe it blows through a little bit. But I do think Tesla still goes higher and into buy the dip stock. Anyhow, be sure to follow me on Twitter. My handle is @JustinPulitzer. Be sure to hit the like button below this if you found the video interesting. And please subscribe to the channel. There's a subscribe button below. You will get notifications of new videos being posted, as well as Periscope rebroadcasts and special edition videos. So that is my story. I'm sticking to it. Let's have a good week, and cheers.